Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, I'm glad to be back.
John, Sun Metals reported the third batch of drill results for the Stardust project last week, and the stock dropped once again. Has last year's 421 zone discovery evaporated?
Jim, the 421 zone discovery has not evaporated, but it seems like expectations that it will remain a discovery seem to have evaporated. The company started drilling in early June, but didn't report any results until late July, and those results were okay. What the market didn't seem to like about them was that they were not bigger and better than last year's discovery hole, which was like 100 meters of $300 rock with copper, gold, silver, and zinc credits from a new skarn zone that was distinctly different from what had been explored in prior decades and became known as the Canyon Creek deposit. Now, that was a very big hole, and it reminded me of back in 2006, Aurelian Resources. They had raised $20 million for exploration in Ecuador. They had chewed through $19 million without accomplishing very much at all. And then with the last $1 million, the stock at 60 cents, they pulled the Fruta del Norte discovery hole. And this was a spectacular hole. Stock ran from 60 cents on the open to, just under $3. A couple of newsletter writers who had jumped on it declared, well, this is probably a one-hole wonder drilled down structure, and that'll be the end of this story. So we sold our position. We're out of here. But another observer called Peter Brown said, this looks really big. And he actually that same day put up $20 million at, I think, at a price of $250 or something like that. And, 6 months later, this $3 stock was a $40 stock because the step-out holes confirmed that this was a robust system, 14 million ounces of gold. And then it's now being put into production. And when people see a big hole, they'll wade into the market and hope that, okay, this is going to keep growing and growing and growing like that. Well, there seems to have been a big whale that went into the market late last year when the 421 discovery hole was pulled, soaked up a big chunk in the market. And apparently after that first release, began to sell because the results weren't bigger and better. And there were other factors at play. The company had decided that it wanted to discourage optimistic speculation on the stock and by people like imagining what's coming and that. So they decided we're just going to report what we did 4 to 6 weeks ago. We're not going to say where exactly our drill pads are. And the big question here is this is a skarn system. And when that first hole came out, the company forgot to mention we don't know what true width is, and the IROC police jumped all over them and made them put out a retraction saying, this is a skarn thing. It could be nothing. This could be a one-hole wonder, and as soon as you step away from it, there may be nothing there. The context, however, suggested that this was a really big system, but the strategy they adopted was one of drilling pilot holes and then directional holes. And they started with 25-meter step-outs, stepping first to the south, just to start seeing what the geometry was. And after they'd reported that first batch of results, they said, well, the ratio from copper to gold is shifting in favor of gold. We think the heat source is to the north, so we're going to start marching in that direction. And that created this perception that, I guess the zone is fizzling out to the south. And they didn't really tell us how far they were stepping north. In early September, we got another batch of results which showed some similar types of values. And the latest batch, one of the holes showed lower grade, 0.64% copper, but these are still only one of a couple of several holes that they're drilling to probe where's the zone going. And what we are now seeing is for 160 meters of strike, we are seeing a body that appears to have a height of about 100 meters and about 50 meters thick, and it is plunging to the north, so it's getting getting deeper. And that's not a good thing because it's already between sort of 600 and 700 meters is where the zone was intersected. And now where they are, it's looking like it's going to be about 900 meters deep. Now, they announced that they were going to go and drill right into winter. They're going to put in a winterized camp and keep drilling. Progress has been slower than they had expected, even with 2 rigs. They've decided to bring a 3rd rig on and put it at the southern end of the zone where it's shallower and go chase that zone there and see what happens to the gold values as you get farther away from the heat source. But they now have the 2 drill pads on their own hole 48, 49. They've reported 42. So there's another sort of 5 holes about which they haven't really told us anything. But I did manage to learn that whereas they were doing 25-meter lines, step-outs, now they're doing 50 and 100 meters. And because they have 2 rigs, that means right now the drills are beavering away on a footprint that represents about 260 meters of plunge or strike, if you wish. And if you do the simple, 3D math, calculate the volume and the density, that's about a 5 million ton footprint. And management's goal is to outline a body of 5 to 10 million tons of mineralized material. At this point, we don't know what the grade's going to be. Obviously, the average grade would end up being less than the $300 average that we saw in that first discovery hole. However, they also think that with this type of system, it can blossom where you get suddenly sections of a sort of a pipe-like body where it suddenly becomes thicker and also richer. And so right now, the markets should be speculating, okay, they're finally moving more aggressively to the north. They're continuing to drill. They're not telling us anything about visuals or anything like that. But we should be in the zone where good, new, and maybe even better results should materialize. But when they announced that they were going to winterize the camp, the market became worried about something else. And that was, this program's going to go longer than they had planned, which means they're going to be out of money soon. And of course, the company in the first half of this year, the stock had gone to sort of 45, 60 cent range, traded very well, established a big audience, and the hope was to be able to raise at those levels or higher, maybe even get it above 70 cents and get these warrants exercised that they have at 30, 35 cents, get the early acceleration of the expiry done. But this has not happened, and so the stock has been under selling pressure from parties thinking, financing's coming. This market, which started looking good in June, July, and into August, it's driven by the gold rally. It's kind of fizzled in September and October. It's not doing anything better. So this week, the company bit the bullet and did a flow-through combined charity financing between 25 and 31.5 cents. It started at $4 million, and it's now been boosted to $6 million. So that's 22.5 million extra shares. But the money is in the bank. The hit has been done, and we're waiting now for the next batch of results. However, CEO Steve Robertson tells me because of the slow turnaround with assay labs that they're experiencing for this part of the world, it'll probably be early November. So the company's cashed up again. It's stepping out aggressively. It's showing all signs that they think they're going to reach that 5 to 10 million ton target, and that's just a rough, back of the envelope type calculation. They signaled that the next stage would involve putting a decline into the system so that they can delineate the deposit for development purposes through underground drilling. But once they are underground, they can also start probing in many directions with much shorter holes to see if there are additional skarn zones of this 421 zone nature and build this thing up even bigger. So in my view, the stock is pretty much bottomed, and we should start getting some more results that flesh this all out. And with the fear of a dilutionary financing out of the way, I think the stock is ready to recover. The only other thing that was sort of floated as an explanation is that it's perceived as a copper play, and copper has been the doggiest of the base metals out there at, 260, and it's tied to all these negative expectations about the global economy. As for that whale that was in the market, that got cold feet when that first batch of results didn't make it bigger and better, that whale apparently, who helped, start the downtrend by selling, that whale is gone. And the selling that's coming now is really more just a general group, ragtag group of smaller sellers. So I think the stock's bottomed and is ready to hopefully confirm that, yes, the 421 zone is something that's going to become a high-grade underground mine.
We'll have more with John Kaiser right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Solstice Gold Corp reported the results for its summer drill program at the Kahuna Gold Project in Nunavut. The stock plunged more than 60%. Why that drastic market reaction?
Jim, this is just a sign of how negative this market has become. Last year, they raised $8.4 million at 25 cents. Based on the potential for this Kahuna project, which was originally a diamond project that Sheer Diamonds had developed and found multiple dikes that are diamondiferous. Dunedin Ventures ended up with it, and as part of the whole till sampling process, they also had picked up gold grains. And the big mine in that area is the Meliadine mine that Agnico Eagle now operates, and it has about 6.7 million ounces that will be mined over the next 14 years. That's associated with the Pike Fault, and it's all in a sort of a greenstone country rock, Archean greenstone country rock. And the gold in this area shows up in iron formations where they intersect with splays and shears related to the main fault. And so all the gold ounces are associated with the Pike Fault. But there's another fault to the north called the Raptor Fault, and Agnico Eagle owns the western piece of it, and Dunedin, and now, of course, the Solstice Gold after the spin-out, owns the gold rights to the eastern part. And so this attracted people like Rob Cudney and Rob McEwen, people who understand Canadian gold, and that's, they raised up that big chunk of money. About half of it was spent last year developing targets, building a good case that, hey, we have similar iron formation hosted gold potential as on the Meliadine project. And they kicked off the season in June. They spent $2.5 million, and they only spent $1 million on a 6-hole drill program that took all of 3 weeks. It was supposed to be a larger program of 11 holes or so, but weather became a big issue this year. A winter onset was earlier, and so they decided to cut that off. And also the main target area, the Enterprise area where they drilled 4 holes, most of it is covered by Enterprise Lake. So it's something you would really want to drill in winter when it is frozen, but they needed to do some concept proof, and they drilled these 4 holes, and the results, there was one interval that spiked to 1 gram per ton, but most of it was less than 0.2 gram per ton over short intervals. That does not an ore body make, but for them it demonstrated that yes, there's sulfide in these iron formations, there is gold present. They checked off a number of boxes that were part of this hypothesis that this part of the banded iron formation trend has undergone a type of flexure and has undergone magnetite destruction, which means fluid flow, and that this area, which has never really seen any drilling, should have the potential to host gold deposits, medium to high-grade gold deposits, similar to what's associated with the Pike Fault. But the market, with regards to these grassroots-type projects, it wants the discovery hole. It is now, if you don't deliver a confirmed discovery hole, it's boom. Everybody's just liquidating. And that is what happened. 3.6 million shares trade. The stock plunged from 15.5 cents down to about 5.5, 6 cents. Half of this volume was unloaded through alternative trading platforms rather than the venture exchange itself, and through the Jitney and Anonymous. The Martin Tooney, the president, called around, saying, okay, who is it that gave up? And everybody seemed to be at a loss. Obviously, somebody was lying and bailed, but key stakeholders such as Rob Cudney, they actually filed a report, insider report, today, showing that they went and scooped 50,000 shares added to their position. So they will have $1.3 million left. That's not a huge amount, but it also means that with their 65 million shares issued and 92 million fully diluted, they're still in good shape. And right now they're doing a big review of all the data compilation. They think they have a case for going in there in February when it's frozen, sort of mid-February, and drill the better targets that can only be accessed by drilling from ice. So in my view, I think it's an even better bottom fish at these prices. They don't have to finance here. Maybe they'll do some flow-through financing at the end of the year. But by then, the market will know what it is that they want to drill, and if they do plan to drill, so they could end up having a better price and not have to finance down here at 6 cents, which would be a tragedy, blowing up the company at this stage. But again, it's not like they've destroyed the story. They've confirmed the basis for being optimistic, and it was a mere 6 holes that they drilled. And 2 of them were in the northern part, testing the Megafold and Grizzly targets, and these also confirm that, yes, these are valid targets. So a sign of what kind of a nasty market we are still in, 8th year of a junior resource bear market.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, last week you devoted the entire Discovery Watch session to Nevada with a focus on New Legacy Gold and Nevada Exploration Incorporated. Both these companies have 100% owned swing for the Fence Carlin type projects. But what about Renaissance Gold, our Discovery Watch junior, dedicated to the prospect generator farm-out model?
Renaissance Gold is the sort of complete opposite of New Legacy Gold Corp and Nevada Exploration Inc. Both of those companies own their projects 100%. They're doing their own financings, doing their own drilling on 100%. And good news this week, Albert Matter for New Legacy Gold managed to close the entire $7.5 million financing of 100 million units at 7.5 cents. That puffs is fully diluted up to 500 million shares. But the valuation, even at that, at the current price, it's a $35 million valuation. And they are chasing through cover, barren cover. They're chasing Carlin-type, rich, high-grade deposits, and now they have the fuel in the tank. They can start doing that $3.5 million U.S. program that Ed Cope and Charles Wheatley put together earlier this year, with 17 initial holes, all designed to test conceptual targets based on analysis of the stratigraphy through CSAMT. And Nevada Exploration Inc. It's just put out a great video, which I've got on my Nevada Resource Center at the KaiserResearch.com, where you can understand why it is this undercover exploration that I call Nevada 2.0, why this is so interesting in Nevada. It gives you a sense of the scale and the nature. Nevada Exploration Inc.'s approach involves hydrogeochemistry. In the case of New Legacy, it involves very sophisticated geological reconstruction, and of course they have the benefit of proximity to the gold rush and 4 Mile trend, where there's already 15 million ounces and a lot more coming. Now, Renaissance Gold has projects scattered all over northern Nevada and even some in southern Nevada, and they do not drill their own properties. It's part of this prospect generator farm out dogma. Once you get into drilling, you don't know where to stop. You can spend all your money, and if you don't come up with that barn burner discovery hole, something like what happened to Solstice Gold, well, that's what's going to happen. So they have been systematically generating project and securing farm outs. And they have over 5 different projects, 6 of them farmed out right now, and they have results pending for 2 of them. One of the groups that they did pretty good deals with was Hochschild, the Peruvian gold and silver miner, and this group's trying to establish a beachhead in Nevada, and they have completed a drill program on the Ferguson Mountain project. That's a Carlin type potential, 5 holes, only 1,200 meters, but these are targets that have been generated through careful geology. We'll have to see. They earn 70%, and they'll have sort of 8-9 years and need to spend $9 million. They've got the drill now on the Mars project, which they think that'll be done soon. And Oceana Gold, which has been a heavy investor in Gold Standard and in New Legacy, and seems to be more interested in these low sulfidation epithermal type systems, it also has a couple projects under option, and one of those is Fat Lizard has drill results pending, and there we're looking for high grade gold silver structurally controlled intersections. Ramelius Resources, which is an Australian company, a producer, they're taking another crack at the Jupiter play, and that's sort of a hybrid epithermal and Carlin type prospect, and they're waiting for the drill rig to free up from the Mars drilling, so that will get a shot before Christmas. And the Oceana Gold also has the Spring Peak project. They're waiting for some final permitting. It's touch and go whether or not they'll be able to get in there before it's too late to get anything done. But in any case, they will be able to return to that project in June of next year if they can't get in there before it gets too cold and messy to do anything. But what distinguishes Renaissance Gold's strategy from that of the others, with the help of an LTS financing done at a quarter this summer, they will finish the year with $3 million working capital, and the Silicon project, which is next to the North Bullfrog of Corvus down in the southwestern part of Nevada, they did a deal that wasn't so great while they were still the private party, Kinetic Gold Corp, Bob Felder's private company, which got folded into Renaissance Gold. They basically sold the project for a 1% royalty to Anglo Gold, and Anglo Gold has to pay them another $2.4 million. They've got over $5 million US into this project, or it is estimated they've done about 20,000 meters of drilling. So this payment is due in middle of next year. So that will give them another 3 million Canadian to carry on. So it's like the Renaissance Gold is like the Energizer Bunny. It just keeps going and going and going. And if because they dilute down to 25-30% depending on the farm out deal, those projects that are farmed out at the current price and their own 90 million shares fully diluted, that implies already a valuation of $100 million. So, if you find $1 billion prize, the stock is maybe a 10-bagger from these levels. So you do not get the sort of jaw-dropping 3,000, 5,000% gains, but 1,000%, or I'll take that any day. And they keep generating new shots, whereas companies like New Legacy Gold and Nevada Exploration Inc., they're putting their money down on the Red Hill project in the case of New Legacy, and South Grass Valley in the case of Nevada Exploration Inc. And yes, if they find a Carlin type system that's rich and has large scale, well, those stocks will go up, to $1 billion plus valuation, but that would be, 30 times a 3,000% gain. That's the trade-off. You get many repeated shots with somebody like Renaissance Gold. You get sort of like a window of one shot, depending on how much money they have, for a New Legacy or a Nevada Exploration Inc. to make that big discovery hold, and everybody realizes, wow, we've got a new gold district, we're off to the races. But with Renaissance Gold, it keeps happening. It can keep happening over and over again, so you have the limitation of the downside in case the results, are mediocre.
John, thank you so much, and have a great Canadian Thanksgiving.
Thank you, Jim, and to all our Canadian listeners, happy Thanksgiving to them, too.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.